David R. Guttery is an investment advisory representative of Ameritas Investment Corporation and president of Keystone Financial Group in Trussville, Alabama. Please stay tuned through the end of the video for additional important disclosure information.
Welcome everyone. Today I'm joined by David Guttery, president of Keystone Financial Group in Trussville, for a discussion about long-term care insurance. David, thanks for joining us today.
Thank you.
Last month we talked about volatility and the management of investment risk, but today we're going to talk about other forms of non-investment risk management, correct?
Yes. Frankly, needs of long-term care can fall upon anyone, not just those nearing or transitioning into retirement. Some of these statistics may be surprising. In the state of Alabama, the average cost of a nursing home private room was $74,825 per year. The median yearly cost for all nursing homes in the United States was just over $100,000 per year in 2018. According to the 2019 U.S. Department of Health and Human Services, every day until the year 2030, 10,000 baby boomers a day will turn 65, and 7 out of 10 people will require long-term care over the course of their lifetime. Medicare does not pay for long-term care. According to the National Nursing Home Survey, the average length of a nursing home stay was 892 days, or just under 2.5 years. It's easy to see that hundreds of thousands of dollars worth of expense could easily be incurred in just a few years.
Well, those are surprising figures. To what degree might Medicaid be available to residents of Alabama to help offset these costs?
Alabama is an income-capped state, meaning in order to be eligible for long-term care benefits, there is a hard income limit at the time of application. Generally, that limit is $2,250 of monthly income. There is also a resource test, which is limited to $2,000 at the beginning of any given month. I strongly advise clients to consult with an elder care attorney for advice when it comes to the disposition of estate and the creation of qualified income trusts and other tools that may be of benefit when it comes to planning for needs of long-term care.
Well, obviously having a long-term care insurance policy can be of tremendous benefit when it comes to paying for these expenses.
Yes, and there are a few ways to obtain such coverage. For most, the traditional long-term care policy comes to mind, but there is another way to seek coverage for these expenses. Many companies offer hybrid life insurance policies that come with chronic illness riders. If the insured is unable to perform 2 out of 6 activities of daily living, most of these riders will provide for the payment of half of the death benefit of the policy to the insured over a 60-month period of time. These policies build cash value and can serve multiple purposes. In addition to being life insurance, they are providing a death benefit but also a tax-sheltered source of savings and a source of indemnity against costs of long-term care. Generally, these hybrid policies are easier to underwrite because they're based on mortality assumptions. The underwriting of traditional long-term care policies are based on the assumptions of morbidity. Lastly, the benefit under such a hybrid life insurance policy is paid directly to the insured, regardless of the source of care. It can be a non-medically qualified spouse or child that is actually providing the care at home, but the benefit is payable so long as the insured cannot perform 2 out of 6 activities of daily living. For most traditional long-term care policies, before benefits are payable, care must be received from a qualified medical source, which for many means through an institution or at home through private duty nursing.
Well, it's good to know about these alternatives. In your opinion, is one significantly better than the other?
It depends. The traditional policies can be jointly underwritten, and to some extent, a portion of the premium may be deductible. The hybrid life policy may be easier to underwrite, however, and the benefits paid more easily. It depends on the needs of the situation of the family. I would be happy to meet with anyone for whom this is of importance to help them explore the option that would make the most sense for them.
Well, David, as always, thanks so much for joining us. And for additional information, David can be reached through the means listed upon the following screen. For the Trustful Tribune, I'm Brannon Dawkins.
David R. Guttery independently offers securities and investment advisory services through Ameritas Investment Corporation, member FINRA and SIPC. AIC and Keystone Financial Group are not affiliated. Additional products and services may be available through David R. Guttery or Keystone Financial Group that are not offered through AIC. Some of the products and concepts discussed have their own cost and are subject to risk, including the possible loss of principal. These costs and risk will be thoroughly discussed with you prior to any recommendation or solicitation. Past performance is no guarantee of future results. Information provided is gathered from sources believed to be reliable. However, we cannot guarantee their accuracy.